Hi, I'm Chris Hearn, the founder and CEO of Fountainhead. We're the nation's leading non-bank small business lender. And today I wanted to talk to you a little bit about a question I get all the time about collateral as it relates to SBA loans. So the most common SBA loan is the 7A, one of the things that we specialize in. And oftentimes people will wonder, what do I have to pledge in order to get one of these loans? Because they've probably heard some things about SBA 7A loans. Some of it's myths, misperceptions, and some of it's probably true. But one of the things that people need to get clear about on an SBA loan, there is no SBA loan that does not require a personal guarantee, or otherwise known as recourse. If you've talked to a bank or credit union that suggests that you can get an SBA loan without a personal guarantee, they clearly don't know what they're doing and you should run from them. But let me tell you what that means in terms of additional requirements. Collateral is something that SBA requires its lenders to actually pledge. The borrower should pledge for the lenders when they get an SBA 7A loan. And collateral can take all shapes and sizes and colors. It could be, a lot of times, SBA requirements require that a borrower actually put a second on their house for their lender, which is very, very common. Not as big of an issue as some people make it out to be. Also, you can put UCC filings on equipment, leasehold improvements, variety of things of that nature. Sometimes, if we're not fully collateralized as an SBA lender, we'll require you to get a life insurance policy, a term life insurance policy. Sometimes if you have other real estate that you own free and clear, or even if you don't own free and clear, we might put a lien on that as well. So the bottom line is, yes, as a lender, we're getting a guarantee from the US government to make your loan, but we also need to make sure we do it prudently, which means we require collateral. Any SBA loan over $25,000 is going to require the lender to secure it with collateral. So doesn't mean you won't get the deal done. And in fact, a lot of times this is what makes us kind of unique compared to some of the banks and credit unions we compete against. They overlay their own internal credit policy on top of SBA's. So a little known secret is they're not supposed to decline you for a lack of collateral, and we won't. We actually adhere to the SBA's SOP, which is their policy on how to do these things. And just because you have limited collateral, or what some of us in the industry call airball deals, where there's hardly any collateral, that doesn't necessarily mean we're not interested in doing the transaction for you. So, but it oftentimes is a hard no from a lot of the folks we compete against. So you're always going to have collateral with SBA loans. Even if you don't have a lot of collateral to pledge, the lender has to at least ask for it. Okay, and you also have to personally guarantee. If you're a 20% or more owner of the operating company, or if you're doing a real estate transaction, the real estate holding company, you're going to have to pledge your personal guarantee. So I hope this has been helpful, and if there's anything we can do to help you, please reach out to us right away.